This meeting is being recorded.
Good evening, good afternoon, good morning, whenever you are. Together with the TopFX, we welcome you at yet another part of Become cTrader Master webinars. Let me just double check if I am right on the microphone, so there is no problem of hearing me whatsoever. I think, yes, everything looks good. So let me just switch back to the full screen of the, of course, cTrader platform. So today we are going to talk about the Fibonacci Fan. Excuse me, the last one of the Fibonacci tools available in the cTrader. We, as you remember, we've been talking about the other tools. We've been talking about the tools like Fibonacci, of course, projection, Fibonacci extension, Fibonacci time zones, and now we are going to talk about the Fibonacci Fan, the last tool that we are going to talk about from the Fibonacci series. So Fibonacci Fan, what it is and how it works. So as you can see, you can find the Fibonacci Fan under this menu, the usual menu for the Fibonacci tools in cTrader. And you need to remember that the Fibonacci Fan is a charting technique that can be used in a technical analysis that, of course, uses the Fibonacci ratio. Why it uses the Fibonacci ratio? To predict support and resistance levels on the chart. So Fibonacci Fan will be then using y-axis and x-axis simultaneously, so price and time at the very same time. But let's just talk about for a minute about the Fibonacci ratio, because maybe not everyone is familiar with that term. Let me just make it a little bit more approachable for you. So the Fibonacci ratio can be used to describe the proportions in things, okay, from nature's smallest building blocks, such as atoms, for example, to the most advanced patterns in the universe, like unimaginably large celestial bodies. Nature relies on this innate proportion to maintain balance, but the financial markets also seem to confirm this golden ratio. So, Fibonacci Fan are sets of sequential trend lines drawn from a swing high or swing low through a set of the points dictated by the Fibonacci retracement. We talked about it before, and to create them, a trader draws a trend line of which to base the fan, usually covering the low and high prices of a security, of a CFD, of a, I don't know, any other liquid asset, of course, over a given period of time. So let me just show you how this Fibonacci Fan looks like and how can you apply the Fibonacci fan on the chart. So you click on the Fibonacci fan. Let's say you take this swing low, and now you need to find the swing high. So for example, I will choose this swing high, and this is the dashed line I'm using to, as in every Fibonacci tool, to mark swing low and potential swing high. Now, what I have are three lines, right? 38%, 50%, 61%, and corresponding levels for these lines. Let me just zoom in. I got 4,042, 3,997, 3,953 on the S&P 500 CFD market. Okay, so what exactly it means, what these levels means on this chart. These lines can be used to predict the key points of resistance or support at which the trader might expect a price trend to reverse. Okay, so once a trader identifies patterns within a chart, you can use these patterns to predict future price movements and the future levels of support and resistance, and use it to time your trades. So in our situation, what do we have here? We have 38% of the Fibonacci retracement just around here. So please remember, this is together the time and the price combined at this retracement. So in time and price, 38% retracement of this swing is 4,042 level. 4,043 was the actual low here. Very nice, very good tool. And then big daily up candle, and then market went towards the line, fan line again, Fibonacci fan line again, and then bounced again. You see, this is another use for the Fibonacci fan lines, because they can be used not only one time, then they can be used multiple times. Okay, the same situation might be done, might happen, sorry, when the price hits 50% of the Fibonacci retracement. For example, 3,997. And then, of course, we might have a breakout to the downside or a bounce and continuation of the prevailing trend in the background. Okay, because please remember, those fan lines and the corresponding levels here are all retracements. Okay, it doesn't matter of the direction of the trend. The trend can be up, trend can be down, doesn't matter. We can do, for example, right now, we can remove this trend line, Fibonacci fan, sorry, and then we can apply another one. For example, we can apply from that high, from that to that low, the Fibonacci fan. So let's click here. That's the high. Click and hold, drag it down. That's the low. Of course, as an analyst and trader, you should take into the account only what's happened after the last swing, high or low. In our situation, what's happened after this low. So you don't take into the account this one because it happened before this low was made. Okay, so this is what's happening here is important for you. And what do you see here? You have a bounce higher almost to the level of the 38%, then a breakout, then a breakout towards 50%, then breakout to the downside, then a breakout almost to 61, then local high, movement to the downside, and again, and then the market goes way higher. What does it tell you as a trader? that the market went way higher. Well, what did you expect? You expect this market to behave like this. Go towards like 50 or 61% of the Fibonacci retracement and then continue the prevailing trend. And the prevailing trend is to the downside, yeah? So you wanted to see the down move. Very, very simple to understand. So this is what you wanted to see. Let me just change this to the yellow. There you go. You wanted to see down move. Because that movement here supposed to be only retracement, both in price and time. It didn't happen. The down move never happened. Instead of that, the market went higher, which means all of the potential resistances combined of price and time were violated, which means, of course, market is free to move way higher than it is right now. Let me just give you another example. Let's just zoom out and see some significant high or low, very significant. For example, the red line is the current price of the S&P 500, so don't worry about it. For example, what we want to do with the Fibonacci Fan on a daily time frame chart is to mark one of the levels. Let's say we will use, let me just take the Fibonacci Fan, we'll use this low, and we will use this high, okay? So this low and this high. You can easily see that at one point of the time, let me just zoom in. Yeah. This time is almost 2 months. A little bit over even 2 months, okay? And then after 2 months, look how perfectly 61% in price and times holds. Here as a technical support, technical support, as a support, general support, or maybe we should call it Fibonacci Fan support or something like this. Then we went higher, retrace again, look, beautiful movement to the upside, again new high, and again new high. Then of course situation changed because after new high was done, higher than this one, we went a little bit lower, broke below the 61%. Now we know that this swing highs and lows were used in 100%, so it's no longer applicable. But during the recent bounce, we've been rejected from below of the 61% of the Fibonacci retracement. Yes, so it's sometimes worth to leave this line on chart. And then, of course, we got a very big slide to the downside. Let me just zoom in just once. And you can see that this line never came back to the, the price never came back to the 61% Fibonacci retracement level. So for now, okay, I will leave it here. I didn't want to, oh, there you go. I want to leave it like that. Look at this. Now, this situation, let me just zoom in. Oh, I can't. You won't be seeing this one. Now we moved our line from that low to that swing high. Price is moving down. A little bit of a stop on the 38%. Then break out. Okay, 38% didn't hold the base from pushing it lower. Then it worked as a resistance. Another slam way below 50. And now we are approaching 61. Look at this. Perfect bounce from 61. Then we try to go lower, close above the 61. We try to go lower, candle close above 61. Try to go lower, candle close above 61, and then we have the price movement to the upside. It means that 61% again worked, again hold the bearish pressure, as you can see here. So sometimes you need to simply combine and look for the perfect swing high and swing low in order to apply the Fibonacci Fan, as you can see here. And okay, it's moving together. Let me just move it here. Let's say this is our high. Who knows? Maybe it is. It's a higher high, higher than this one, higher than this one, this one, this one, this one, this one. Okay, fine. We are taking into the account over half of the year time period. 12 of the October, 11 of the May. Okay, 8 months. 38% of the Fibonacci retracement in price and time on the Fibonacci Fan is 3,935. Then 50%, 3,851, and 61%, 3,766. We don't take into the account this one because it's still in the territory of this dashed line. Dashed line just connects swing low to the swing high. So that's the future possible levels of the technical support. I mean technical support in terms of the technical analysis, of course. Fibonacci Fan support for the S&P 500, right? So right now, we will zoom out even more. This is going to be interesting because we will zoom out to 2020 for the post-pandemic rally. And this is it. And this high. You can see. Okay. More or less, it looks good. I don't want to brag about too much. We have this high, we have this low. For that time of period, Fibonacci Fan 38% is 3,801. It was violated, then almost went to the 50. Back up again, 38 rejected, 50 broken, and then it didn't actually work that well because it went higher and then eventually went somewhere around the 61%. Then it was close between 60 and 50, bouncing up and down, and then bounced up again from this one. So maybe when it goes lower, the S&P 500 goes lower, it will be wise to pay attention to this line here. Of course, the level here, 3,180, is no longer applicable because, as you can see, it was hit, almost hit already during this movement down. So it's very, very low probability that the market will go again to 3,180. But now, if the 61% of the Fibonacci retracement was Fibonacci Fan retracement in price and time was hit, we just rely on the line. So we rely on the graphical representation of the price and time retracement. Okay, so we don't bother about the levels anymore. Let's find out what's going on the euro dollar, how it works with the euro dollar. For example, we got the euro dollar daily time frame chart. Those levels are trading central levels. Don't bother about them. Fibonacci Fan will be applied from this high to, of course, the very, very bottom. And as you can see, yeah, is it correct? Yes. And this one. If we take into the account this swing high and this swing low, this time period, we can see, look, 38 almost to the pip hit, 50 hit as well, then 61 almost hit to the pip. Let me zoom in. There you go. Trying to apply it as the best I can. There you go. That's a very good reversal. Look at this correction here. The biggest correction during the whole movement to the upside is here when the market hits the level of 61% Fibonacci retracement. Then of course it bounced back up, and now it's above the 61%. But if we take this high, let me just take this high and move it here for that swing, and let's just move this low back to its place somewhere here. You can see that the situation is interesting as well. Fibonacci Fan applied, 38%, 50%, 61%, just a little bit overshot and then reversed. Now we are testing 61% from above. Good place to do some sort of the bounce, okay? This is how we use Fibonacci Fan. And the last for today will be, of course, this swing, because it looks like the market somehow recognized this kind of a movement, okay? So we are going from that low to that high. Let me just apply it correctly. Okay, what do we have? We can zoom in. Not a problem, I think. Yes, just a little bit. No, it's okay. This low and this swing high, 38%, a little bit violated. One low, second low, third low on the 50, and rally to the upside. Then 38 violated, 50 violated. Now we are approaching the 61%. 61% is 0.1007. So it's a little bit lower than this level is. Nevertheless, it's not that much. The Fibonacci Fan is not that much about the levels here, but it's all about these lines here, about the fan lines. Levels are good to play if the market is hitting them straight on, and there is no doubt that these levels are in play. But when the market is so far away from this level, for example, we take into the account the Fibonacci Fan line only on the first place. This is how we should interpret the Fibonacci Fan. So as you can see, we are approaching the very important technical support in price and time, of course. And last market that we will apply the Fibonacci Fan is the gold market. Okay, very interesting market. So this is a daily time frame chart. There was a very, very nice rebound to the upside, almost towards the all-time high. Actually, all-time high was done. Let's see what will happen if we apply the Fibonacci Fan to this swing low. There you go. And of course, this swing high. Let me just apply it as precisely as I can. There you go. What will happen? Okay, so this is the swing low. Can we move it? There you go. Swing low, swing high. We choose it arbitrary, of course. What do we have here? 61% retracement, no bounce. 50% retracement, no bounce. Then we go lower. 61% never was touched, never touch, and then we go higher. Then we keep above the 38, keep above the 38, another swing high, and break out to the downside. Then we try to go higher. We do another all-time high just above the 38% Fibonacci fan line, breakout to the downside, 50% breakout to the downside. Now we are approaching 61% again. So somewhere here, there is a very, very fine-tuned in price and time Fibonacci of the Fibonacci fan technical support level somewhere here. We don't know what day will be for this technical support to be tested. We just know that this is the level we cannot actually let's say disregard, because it might be quite important for us in the nearest future. Let me just apply for the last time this situation here. Very interesting already, but I want to move my low here. It might be not that perfect because it's a kind of a long time period. So you can see 638 bounce, but didn't work. 50% bounce, didn't work. Then test from the below, rejection, and now breakout below 61%. So possibly we might have some sort of the shot to the downside towards this lower trend line. Oh, I'll move it again. Towards the 61% lower Fibonacci fan line, somewhere here, and then maybe if supports hold, we might have very nice bounce on the gold. So this is how you use Fibonacci fan in your everyday analysis in order to, let's say, predict the possible supports, possible resistances on the chart. You rely on the lines of the Fibonacci ratios 38, 50, and 61%. And that's it. You can combine, of course, the Fibonacci fans with the other technical analysis tools to increase your accuracy, to increase the precision of the entry. There is no problem whatsoever to do it. So please feel free to play around with the cTrader and the very rich arsenal of tools of the Fibonacci retracement, fan, time zone, arc, and expansion, to see which one applied to you, which one you can use for your own benefit, and then of course make your trading life better, more profitable for you and for everyone you care about basically in your life. That's everything from me for today. Thank you very much for watching this webinar. I hope we will meet each other next week for another very interesting topic related to the cTrader platform. Thank you very much for now and see you next time. Bye bye.